What's up, everyone? It's Karthik with MoneyVest. So markets continue to sell off. More specifically, Magnificent 7 stocks are now in a correction. We've got the NASDAQ in a pullback. The S&P 500 still under 25 basis points away from being in a pullback. Right now, it's still in a dip. And again, we continue to see a tech sell-off here. We did recover a little bit to very much extent to the markets being flat to somewhat green, and then of course rotated back lower towards the back half of the day. So this right here was my portfolio, of course down a little bit over $7,600 intraday. I was basically flat on the entire day here, but this right here of course was the sell-off from its peak all the way back down to pretty much break even on the day here as the markets sold off towards the back half of the day. And I should really specify that it was mostly technology that sold off because other parts of the market, other sectors continued to do well. So as always, make sure that you drop a like and subscribe to the channel if you're just joining us for the first time. I would really appreciate that. And I also want to mention that I posted my 37 stock shopping list for all the members on Patreon. So this right here is a video I posted on April 19th. So this is going back on April 19th. You can see that I've marked out the date here. My 30 stocks shopping list with buy targets. And in this video, I listed my nibble target, nibble buy, light buys, heavy buys, no-brainer buys, and the fair value for each stock here. 30 stocks that were presented in this video. And this was the video that it came out on April 19th. And of course, we saw a 21% rally on the QQQs on the NASDAQ after the video came out. And this right here is the time again I posted the second video, again going over my 37 stocks and ETFs to buy with the buy target. So link's going to be down below if you want to, of course, access, watch the video, and take a look at that entire spreadsheet. I've also shared the screenshots in our Discord with over 37 stocks and ETFs and all my buy targets included, so that you can take advantage of this market sell-off, this pullback, and this correction that we're seeing in technology. So most of the companies do belong to technology, cybersecurity, semiconductors, and then, of course, a lot of different cloud services, advertising. Again, there's over 37 of them. So you can pretty much take a look at the entire list and all the buy targets as well. So link's going to be down below. There is a 51% discount available until the end of this month. And after that, it does expire. And there's also a 16% annual discount also available until the end of this month as well. And the reason why I'm putting so much emphasis on this is because now is really the time to get ready to start dollar cost averaging, as I've tried to mention this over and over again. And this right here is a clip from the video from back in April 19th that I wanted to play for all of you. So just listen in on this. It's about 1:30. So we're going to spend about 1.5 minutes listening into what the analysis and the thesis was back then, so that you can better understand where I'm coming from. So let's listen in on this. That includes the market prices, but this is the video that I'm recording as of Friday, April 19th. I'm also going to break down our very own MoneyVest index to kind of help you better understand where we are in this overall market sell-off and why it is so important to get ready now. Because, as I mentioned before, the markets don't give us very many opportunities to dollar cost average or buy, and there's only a few serious buying opportunities in the market. And it's times like these, what we do in times like right now when the markets are selling off, is what really determines what our performance looks like in months and years later, right? So it's really just these small decisions that we make during the most important times that make all the big differences in our investing journey over the long term. So share this video with other family and friends, other people that might be interested. And I'm going to break down almost 30 stocks. This right here is the MoneyVest index. As you already know, we're trading now down to 3.08 as a NASDAQ is selling off. S&P is down about 33 basis points, sub 5,000 at the moment. So you'll notice that we are, of course, seeing this extensive sell-off here, acceleration to the downside. We're down a little bit over 5% now. And the NASDAQ here also is lower, selling off quite more aggressively, down a little bit over 1%. And of course, selling off from its highs of 16,500, down over 6.6%. So as the market continues to accelerate that sell-off, it's now time for us to be a little bit more active be a little bit more aggressive and, of course, take advantage of those opportunities. Netflix, of course, selling off after the earnings, down over 7%. AMD, Meta, down over 2% each. Nvidia is down over 3%. So that again was the analysis, and MoneyVest Index was of course trading down to 3, which I've showed you guys back on April 19th, and 20th was the last most serious opportunity to buy. And take a look at some of these prices, right? I mean, crazy. Meta was back then trading at $487. Tesla was at $150. Nvidia was at $821 on a pre-split basis. Amazon at $176. Apple at $165. Now it's well over $200. Microsoft was at $400, and Google was at $155. So again, the prices were significantly lower, and if you could go back, of course, I mean, there would be buying opportunities, and you would love to dollar cost average into. And that video came out, like I said, on April 19th, and I've posted one again. Now, coming over to where we are with the markets here. So this is the entire thresholds for the market. So S&P 500 trading at just under 5,400. We're down a little bit over 4.87% from our all-time high, so we are in a quote-unquote dip. The NASDAQ is down to 17,181, so it's down a little bit over 9% now from its all-time highs, and it was down 1% on the day, so we are in a pullback. We're just under 1% away going from a pullback over to a correction. Again, these are the thresholds, so always remember that. If you're within 5% of all-time highs, it is still considered a dip. If it's 5 to 10% down from its all-time highs, we're in a pullback. If it's over 10 to as much as 20%, we are in a correction. And if it's over 20%, we're in a bear market. And if it's over 50%, we are in a full-blown crash for the market. And this is the all-time high, and these are some of the index levels that we're watching at the moment. So the moment the S&P 500 crosses below 53.86, and right now we're at 53.99, so just about another 13 points lower, we're going to be in a pullback for the S&P 500. So again, S&P is in a dip, NASDAQ's in a pullback, Dow Jones is in a dip. It's only 3.5% lower from its all-time highs. Russell 2000 is also in a pullback. It still hasn't recovered from its all-time highs. It's still down almost 10% from its all-time highs, trading at 22.22. And the Magnificent 7 is down the most, which again, as you can see, it's down over 13% and is the only index here that is in a correction, because a lot of the sell-off has been concentrated towards tech. That's one of the reasons why Magnificent 7 is, again, in a correction, because they're the ones that are selling off the most at the moment. Now, OpenAI also announcing Search GPT, its AI-powered search engine. So if you read further, OpenAI is announcing a much-anticipated entry into search market called Search GPT, an AI-powered search engine with real-time access to information across the internet. So that, again, is a bit of a threat to Google. And that's one of the reasons why Google was also selling off quite aggressively here. So if you come over to this list, Google was down almost 3%, Microsoft down 2.5%, AMD down over 4%, Apple down almost 0.5%, Amazon, Netflix also down 30 to 40 basis points, Nvidia down 1.7%, Tesla, the only Magnificent 7 company that managed to close green, up almost 2% on the day here. So this was the entire market, and again, a lot of other sectors and stocks actually ended up doing well. We had Salesforce, ServiceNow, AbbVie, Johnson & Johnson, the entire financials and asset management sector. We had energy, we had basic materials, consumer defensives. A lot of liquidity flooded over to other parts of the market. That's one of the reasons why the Dow Jones did much better on the day today. In fact, it was, I believe, higher. So if you come over to the Dow, it was green. It was up over 20 basis points, just shy of 40,000, versus S&P 500, of course, rolling over, down about 0.5%. And again, the NASDAQ here, much lower, down over 1% on the day here. QQQs more specifically down over 1% on the day. So again, this right here is the entire sell-off. And if you're holding a portfolio which is very Dow heavy or more value oriented or more small caps oriented, so if you come over to IWM, which I do have, so small caps, I do have a position in small caps, it was up over 1.2%. So once again, a lot of the money is flowing away from big tech, large cap, Magnificent 7 companies over to some of the smaller caps and other parts of the market. And as a result, this ETF is up over 1.2%. Whereas Magnificent 7, so if you come over to this index, which we have created on our TradingView platform, down over 1.3. So it's very clear where the money is coming out of and where it's actually going. This right here, again, is the sector performance. So you can see comm services, utilities, and technology down the most, with industrial, energy, materials doing the best, along with financials and consumer defensives. In the last 1 week, most sectors are down. except for healthcare and utilities. And in the last 1 month, real estate is leading the way, up over 6.5%, along with financials and industrials pushing higher. Sugar and soybean, lumber prices, rough rice, all pushing up. Bitcoin just shy of 65,000 and Ether just a little bit over 3,100 as well. Ed Yardini once again says that this sell-off is just a market correction of the Magnificent Seven. This is, again, pretty obvious, something that we have discussed over and over again, as the tech sector continues to be the worst sector performer in the last week or month, as most of the selling pressure is kind of concentrated over to the Magnificent Seven companies. And FundStrat's Mark Newton, who is the technical strategist, essentially says that the pullback for stocks did not do a technical damage to the entire rally or the bull market setup that we have. And they mentioned that the technicals haven't given us anything to be concerned about. The breadth levels are in good shape, and I don't think that we've seen anything that would really deter us from staying long this market, specifically the small cap side. I do agree on the small cap side, but I also do disagree with the fact that the bull market is intact, because Magnificent Seven is really what determines whether there is a bull market or not. Like, at the end of the day, facts are facts, and that is to say that Magnificent Seven controls almost a third of the entire index. And if they're not the ones rallying higher and they're the ones actually putting in a lower high, or they're selling off, then you better believe it that other sectors cannot and will not be able to hold up their weight and continue to make the markets go higher. That's just facts here, because Magnificent Seven is what drives the market. And if these are the companies that are selling off, then it's going to become really challenging for the entire market to also find any type of momentum. Doesn't matter what other sectors are doing. If the top 7, top 10 companies continue to struggle, it's just not going to be able to find any type of momentum to go higher. So coming over to volatility, so we were at 18.5, so up over 2.4%. Everything we're going to be eventually making it available on our MoneyVest platform. So right now, of course, you can come over to the platform here, take a look at volatility. 18.04 is where we are, 18.47. So this right here has been the increase over the last 1 week here for volatility. In the last 1 month also, you can see a significant increase from its lows of about 14, 15, back up to over 18 levels, hitting a high over 19.24. Something that we have talked about in our previous updates as well, and how it is so important to keep a close eye on where volatility ends up being, right? So this right here was back in April 15th, April 19th, 20th, around those levels, and we're pretty much hitting the same level as we were back during that time. So as VIX goes higher, it's going to be time to start dollar cost averaging, time to buy, because when the VIX is high, it's time to buy. When the VIX is low, it's time to look out below. And this right here is where we're at 18 or 20. Very, very keeping a close eye on this, all the way up to 23, to as much as, of course, higher levels in the 30s for volatility as well. Coming over to the index, we continue to come down, so 3.5. This number still needs to get updated. As soon as it does, I will update everybody on Discord. But I believe after today, it's most likely that we're going to be under 3.5. And the lower we get, again, the better the opportunities will be. I did dollar cost average today, so I did pick up some shares in the markets for ETFs and individual stocks. And we'll continue to do that. We'll continue to alert everybody in the Discord, send out alerts, and of course, let everybody know where we are and how the positioning is for the market, and how aggressive one needs to be in the current environment, considering that we're still on our way lower. I think there is still potential for more downside, and these are the charts that I shared in our Discord. So if you come over to the NASDAQ over here and go over to the 30-minute time frame, what I essentially mentioned is the fact that we're still within the context of a lower high and a lower low. So if you come over to QQQs, these are the lower highs and the lower lows. And I mentioned this in the chat, talking about how there could be a short-term bounce, there could be a relief rally or a dead cat bounce, but don't mistake this for a recovery, a recovery taking place, because we've still got a long way to go, and we need to take out previous highs in order for us to feel confident that the NASDAQ is turning, the markets are starting to shift, and there is a reversal in play. But right now, we're still within the context of this lower high and lower low pattern, as shown to you on the 30-minute time frame. And S&P 500 also in a very, very similar situation. So if you come over to SPX, you'll notice an exact pattern as it continues to trade in this lower high and lower low pattern. So next levels to keep in mind for S&P, 5260, that's going to put us down over 7% in a pullback for the S&P 500, which again is very much a possibility. It's likely that it's going to happen, considering that we did push all the way up to 5487, in fact almost at 5500, and the buyers were not able to stay at those levels for long, and the sellers really just pushed all the way down to closing under 5,400. So it's possible that we do retest lows of about 5260s, levels that we haven't seen since, again, April of 2024. So that right there is going to be the level to keep in mind next for S&P 500. The NASDAQ also, next target is going to be 16,005. We're already down a little bit over 9%, as I mentioned earlier, so we are in a quote-unquote pullback, but I wouldn't be surprised if this turns into a bit of a correction for the NASDAQ, considering the Magnificent Seven is already in a correction at the moment. But fear not, these are buying opportunities, and I'm very, very excited actually to buy more shares and continue to build out these positions to some bigger positions so that once the recovery begins and once we start to see that reversal back to the upside, I'm sitting pretty with my shares bought and my positions built. So that's going to be the idea and the goal moving forward. So next support, NASDAQ 16.5, as I mentioned, all the way down to 15,100, although I don't see the NASDAQ trading all the way down to that level because we'd be very close to a bear market at that point. And although possible, seems a bit unlikely for us to get down there without actually having a very, very big catalyst in the market. So those are some things to consider at the moment. Now coming back over to Magnificent Seven now. Speaking of the devil, Apple here down over 0.5%. Resistance stays put around 220. Next support and target is going to be $206 per share for Apple. RSI is coming down. L3 banker oscillator is coming down. So it's not a surprise that we are seeing a bit of a pullback for Apple at the moment. Talking a little bit about Amazon. So Amazon here also selling off quite aggressively, down over 0.5%. Resistance going to stay put at roughly around 190. And the next target is going to be sitting roughly around $173. Now Amazon's also giving me some vibes related to Head and Shoulders here. So we've got the neckline. And if you haven't seen it already, this could be the left shoulder, a potential head formation, and then a right shoulder in the making for Amazon. So I'm going to keep that here just in case this ends up being a potential Head and Shoulders for Amazon. We just got to be careful with a breakdown below the neckline of 170s. It's possible that Amazon ends up trading in the 160s, possibly down in the 140s as well. So keep a close eye at this potential Head and Shoulders that Amazon's forming at the moment. Tesla, on the other hand, seems to be in a bit of a no man's land. It did gap down quite heavily. This candle still kind of being overshadowed by the yesterday's sell-off. It's not able to break highs of yesterday or the lows from today. So there was a lot of consolidation between the buyers and the sellers. A pretty big battle here in terms of price action. Still managed to close green, up almost 2% on the day, but support level is going to stay put down at $208 with a resistance all the way up to $232. In my opinion, whichever way we end up going down to or going up to, in other words, if you come down to $208, that kind of increases the probability for a potential breakdown and for us to maybe retest low 200s again or sub 200s. But if we do retest back up to, let's say, 230s, then there is a possibility for us to break to the upside and potentially fill this entire gap. And that's when I'm going to be looking at selling some calls once again for Tesla. But right now, it's a bit of a consolidation on the day. Seems to be there seems to be a bit of a battle between the buyers and the sellers, but resistance, like I said, at 232, support level at $208 for Tesla. Talking about Nvidia now, Nvidia sold off quite aggressively, down over 1.7%. At one point, it was much lower. And again, a bit of a doji candle, so lots of indecision for Nvidia as well between the buyers and the sellers. It did push all the way down to 106, got bought back up, and then sellers brought us back down from 116 down to 111. So again, a bit of a doji candle, very, very small body, lots of indecision and consolidation on the day for Nvidia. Support level is going to stay put at $96 a share, with a resistance now sitting put at $118 for Nvidia as well. So a bit of a breakdown. I believe it's already in a correction. It's definitely in a correction, down over 20%. So now it's in a bear market as well. So Nvidia is officially in a bear market because it's down over 20% from its all-time highs. Talking about advanced micro devices, and AMD also selling off quite aggressively, down a little bit over 4% on the day. So breaking down a huge area of demand, which will go ahead and turn this level into an area of resistance now, area of supply, which it did took a pretty long time to break out of, but when it finally did, it essentially broke all the way to new all-time highs. This right here was the breakout, and then this happened earlier this year, so pushed up over 52%, came back down to validate that previous resistance as a support, validated again, pushed higher, got up to as much as 186, and then finally we're starting to see a bit of a breakdown below the 200 SMA and below that area of support. RSI, MACD, L3 banker oscillator, everything very, very oversold for AMD, and next support's really going to be sitting down as low as $130 for this company. Talking a bit about PayPal now. PayPal, I'm a little bit unsure about the long-term trajectory of PayPal, but we're just gonna have to wait and see what ends up happening with Alex Chris. How is he going to, steer the company into success? But support level is gonna stay put at $57, and the next target is gonna be low 50s for PayPal, with a resistance and a huge area of target at $65, all the way up to an area of supply at $68. We seem to be keep getting rejected at that level over and over again. So those are going to be some levels to keep in mind for PayPal. Visa here, flat on the day, but it's not able to recover after the earnings. By the way, speaking of earnings, if you come over to our earnings calendar, we have now adjusted these earnings by market cap. So now the most prominent companies with the highest market caps are going to show up at the top, and some of the lower market cap companies are going to show up at the bottom. So for example, of course, Google, Tesla, Coca-Cola, Danaher, we got Verizon, we got Trust Financial, we got AbbVie, we got Bristol Myers, we got Union Pacific, IBM, Coca-Cola, Cadence. All these companies are going to be showing up at the very top. If you look for next week, we've got a big week coming up next week as well. And if you take a look at next week's earnings, we've got Microsoft, Procter & Gamble, Advanced Micro Devices, MasterCard, Meta, Regeneron, we got Amazon, Apple, Qualcomm, we got AT&T, McDonald's is reporting, ExxonMobil, Chevron. So you got lots of big companies, including Alibaba is up there, ADP is up there, Arista Networks up there, S&P Global's up there. God, there's going to be so many companies. We got, which one is this? I forgot. It's a smoking company, right? Tobacco and smoking. Altria Group, that's also reporting for next week. So these right there are going to be the estimates for all these companies, including Moderna, Intel, all of them, Pfizer, Uber. Next week's going to be packed for earnings. So many companies. Visa support level is going to stay put at 250s and 253. Resistance and targets all the way up to 266 to as much as 270. Also aligned with that 200 simple moving average as the resistance, lower highs and lower lows continue for Visa. And then coming over to Meta Platforms, again, a lot of consolidation sideways in that range, starting to break down from that support, and that next target is going to be down to $420 for Meta, with a resistance and a huge area of supply sitting put at 542. Google selling off, Microsoft selling off, not a surprise, should not be a surprise to anybody because we've been talking about this for weeks now. And Google RSI was already overbought, L3 banker oscillator, everything starting to roll over. It's coming down to a pretty decent area of support and demand here in the 165 down to as low as $150 for Google. So those right there are going to be a couple levels to watch for Google. And Microsoft also selling off, already broke down below 432. Next target and that next area of demand is going to be sitting sub 400 for Microsoft, all the way down to inside this green rectangle in the 340s. So those right there are going to be a couple support levels and areas of demand to watch for Microsoft. And then finally, we come over to Enphase and Costco. Let's take a quick look at Netflix before we get there. But Costco here starting to break down pretty aggressively, down over 1.7%. I think Costco is extremely overvalued. I even did an analysis on Costco on my platform. So this right here is going to be the analyzer. And if you come over to the discounted earnings, hit autofill, and then try to figure out, okay, what's going to be the next 5 years worth of growth rates, even if you go with 15% growth and almost a 40 times PE multiple, then the actual intrinsic value, even then, Costco is about 30% overvalued, and the fair value ends up at $572. So, right, so this right here is going to be that matrix or that sensitivity grid. But if you take a look at some of the lower P multiple, let's say that you come down to 30 and a 14% growth rate, then your fair value is going to be significantly lower. I mean, we're talking about 40% lower, almost 50% lower to $416. So Costco is one of those companies that, in my opinion, is extremely overvalued right now. I just can't get around how it is able to demand such a high multiple at over 30 times cash flow and over 51 times earnings is just beyond me. But next support level is going to stay put at 786, down to as low as 748, and also aligned with that 200 SMA sitting in the low 700s for this company. Enphase continues to do well. I mean, it's still outperforming the NASDAQ, so that's good. Yesterday was a huge outperformance from Enphase. It was up a little bit over 12% on the back of a very, very brutal day for the market on the back of its earnings. But again, support level is going to stay put roughly around here inside this green rectangle area of demand, resistance, and a huge target, a triple top, is going to stay put at 139, close to $140 for Enphase. And finally, Netflix slowly and steadily making its way lower. Next support is going to be down as low as $600 for Netflix. And again, resistance and targets all the way up to $700 for this company as well. So hope you all enjoy this video and a complete update on the markets. We continue to see a bit of a selling pressure here on the NASDAQ. QQQ is down another 1.1%, down in a pullback over 9% from its all-time highs, but opportunities are coming our way. Make sure that you do check out the links down below if you want to access all the members-only private videos, including the brand new video that I just posted with 37 stocks to buy. The last time I posted this was, of course, on April 19th, and this is another, in my opinion, serious buying opportunity kind of brewing up for us as the window opens up for us to buy. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like, subscribe to the channel. 51% discount available until the end of this month, along with that 16% annual discount that also expires at the end of this month. Happy investing. I'll see you all in the next video.